Real estate investing is its own thing, and it is for people who are patient. You don't start out being financially free with your first property. It feels like you have very little for quite a long time, and then all of a sudden, pretty much, you are quite wealthy. So I think if you talk to anyone who is wealthy, who is successful, there is a portion of their assets that are real estate.
Hello everyone. Today I have a very special guest joining me today, Lauren Rogers. I just want to make sure that I pronounce it the right way. And Lauren, I'm thrilled to have you on my podcast. I would like to introduce you as a partner at Veritas Equity Partners. Lauren operates at the highest level of private equity, working on the strategic investments and building the strong portfolios. Lauren, welcome. I'm happy to have you here. If you can just say a little bit about yourself.
Sure, happy to. And thank you so much for having me. Great introduction. I appreciate it. I am the co-founder. I am one half of Veritas Equity Partners. We are syndicators based out of Washington State. So we specifically buy workforce housing in our own market. We've been doing this now for 15 years personally, buying the same type of assets that we have now opened up to investors to participate alongside us to get the similar benefits that we've got personally. We know this market really well, and we have a very specific niche above mom and pop investors and below institutional in the workforce housing space in specific markets in Washington. And I've been doing this now for a little over 2 years. My partner has been doing this for 15 years. But in terms of raising money and allowing other people to work alongside us, we're going on 2.5 years now.
Amazing, amazing. 2.5 years. And how did you scale from 250K to 12 million? Please share with me that secret.
Yes, so that secret was my partner buying personal real estate from 2010 to 2022. So started with about 250,000 from the sale of a tech company, which he then parlayed into an 8-unit apartment building in Seattle. And we used the classic 1031 method to just continue repeating, some refinances in there, lots of sales in there. I believe it was I think it was 9 deals total, over the course of 12 years to end up with a significant amount of equity in real estate, which then put him in the position to be financially free, right, with enough cash flow from existing properties to allow us to think about perhaps we want to exit our corporate careers and help other people do the same strategy and end up financially free at a young age or whatever age they are, and would like, to be in a situation where they have cash flow and not just equity, which is why I'm so passionate about real estate. Real estate investing is its own thing, and it is for people who are patient. You don't start out being financially free with your first property. It feels like you have very, very little for quite a long time, and then all of a sudden, pretty much, you are quite wealthy. So I think if you talk to anyone who is wealthy, who is successful, there is a portion of their assets that are real estate. And there are a lot of people who are incredibly successful that are almost entirely in real estate. And there is a reason for that. So we've seen that personally with our own money. We didn't start taking any money from anyone else until we'd done this, 9, 10 transactions personally. in a specific market doing one specific thing. And then we said, hey, I think based on where we're at, this is pretty incredible. And we were encouraged by some mentors bigger than us in the space, people with big funds, 30 years of experience, really encouraged us to allow other people to get in and benefit. And hopefully, we can create a similar type of outcome for other people that we were able to experience ourselves.
Wow, wow. Amazing, amazing. You know what? You've been there, you've done that, you experienced yourself, and you mentioned about the mentor. I guess mentors are playing a big role in investing, and it's a risk that we all taken, but to have the right mentor, I think that's the key as well.
Absolutely. We have some really powerful advisors. One of them's very high up, retired now recently, but very senior, JP Morgan, specifically focused on multifamily for his entire career. We also are very close with a mentor here who owns a large fund, started out as a property management company. I believe they're the biggest local property management company in Washington
Wow.
state. And then they did it differently than us. They started out as property managers and then started acquiring some of those properties. They're now a very large, successful local fund. So
Uh-huh.
lots of people in our corner. That we also have an institutional partner who's partnered with our only co-GP on a deal. They own over $1 billion worth of real estate all across the
Amazing.
country. Then they became very interested in Washington state. And so that's where we're the experts. We've partnered with them. So lots of very senior, experienced people who we lean on for expertise. And I think that's really important. And I would give that advice to people starting out: find someone who has done this before you go ahead and try to conquer it yourself, because nothing about real estate investing is actually passive, contrary to what you will hear on TikTok.
I see. It's to have the right people next to you, it's important as well. And you have the right network, the right team, which is make you successful and brought you to that where you are. Let me ask you something. I know that you're working with the passive investors a lot. How do you believe, or maybe how do you building that long-term trust and relationship with them?
Great question. That's the most important thing in running a long term business. We're trying to build the type of firm that we would serve a relatively small group of investors for a long period of time. So you can think of us as similar to wealth managers in the sense of a serving a small group of people really who hopefully want to run with us for a long time. I think one, in terms of earning trust at the beginning, it's really our track record that sells. I think that's a very important thing for every LP, which is limited partner in our deals, to ask any syndicator as you're interviewing whoever you might be putting your money with: what experience do you have in this specific space and specific niche? I would really encourage people to only invest with someone who is an expert at that particular thing. It doesn't have to be my thing, right? But make sure they've done a lot of deals and have really deep knowledge in whatever it is that they're selling. So that's important in terms of right off the jump, but
Right.
maintaining those relationships, a huge part of our business, which is very flattering considering how new we are, is we already are getting a substantial amount of referrals. The bulk of our business comes from our current investors telling their friends and family about us, because we are very transparent. We're consistent with our reporting. We've never done any capital calls. We overfund all of our deals. We raise the CapEx in advance. We're not doing rehab loans, bridge loans. We're doing only agency debt, very conservative. So I think our LPs, we really reduce their exposure to risk in a whole variety of ways that I could
Right.
go over. But that is something that we explain to people. Our insurance, because we are agency, that should also give people hopefully some peace. The amount of vetting and continuous reporting that we have to do, continuous inspections, multiple inspections before we can even buy a deal, vetting us as operators. Obviously, our loan terms are better, good loan to value, no additional loans on top of the agency debt, all of these things. I think it's really about not only high returns, it's more about protecting people's money. So a good investor for me is not someone who says, I want 30% a year. It's someone who says, I want you to hit doubles. I like 15% returns. I'm happy with 10 plus because it's not taxed and it's safe. We're very conservative in terms of, I don't think you can get that much more conservative than workforce housing, semi already stabilized assets in a supply constrained market that doesn't have enough housing with long-term fixed debt. We have plenty of time to execute on our business plans. All of those things, I think we tend to attract someone who is realistic and also wants to protect their capital and they want tax benefits. That's my ideal client.
Amazing, amazing. So much information. And I'm like, I already got so many tips from you. Like, I have to share with my investors. And you're right, sales records, and all other criterias that you have to have probably a checklist before you even syndicate with someone. Amazing, amazing. So much value that you are actually giving to our clients. But I see a lot of investors, they still do a lot of mistakes, especially the underwriting. When you have that red flags that you see, what's your advice for investors? What's the meaning that the red flag that they should, look for before
I
they.
think there's a few things. The debt. You really only lose your capital in this game based on the debt structure, and people don't ask about that enough. So make sure that, the GP is putting enough money down. What's the loan to value? And then looking at different types of underwriting. So we can show people like, hey, here's the best case scenario, kind of stress testing just different cap rates. And in terms of how we're even telling you potential cap rates, we have whole white papers on, this specific market. Here's the history of the cap rates in Edmonds over the past 15 years. So they can see, maybe they don't know this market, but we can say, based on historic data, here's some possible scenarios that could take place, and here's kind of your worst case return, and here's your best case. So we're not going to
You show it
people,
all. You say a good thing and a bad thing can happen.
here's if everything goes wrong and the market goes down, here's what you're looking at, and it's not losing your money. No one's going to lose your money, and that's a big thing to people. And then it's also, hey, if ever we kind of think we're at the bottom right now or close to it. And I think there's pretty good agreement across the multifamily space that we feel like it's a good time to buy in terms of the basis that we're seeing, the deals that we're getting. Cost per door is very low, and these deals cash flow from day one without even having to do renovations. But obviously, once you get in there and you start renovating units and doing typical value add is a broad term, but we do light value add. So we're not doing permitting. There's nothing that can slow us down, and we get stalled because we're doing some complex development. We're buying units and renovating them. But the key thing also is these are places that the rents are already low, which anyone can go and check. There's tools out there like Rentometer. You can use a variety of tools to say, tell me within this radius, what is the median rent? So we're buying median rent buildings. We're not buying fancy stuff and we're not buying crappy stuff, right in the middle. And we're trying to get to that median rent, which I can show you all the buildings nearby my property and say, this is how much they're getting for rent. Here's a picture of their units, their building, and our rents are 1650
Right.
at this building that we're buying, and they should be 1850. And that's not even factoring in that probably over time our market only goes up and gets more expensive, but I'm not even factoring that in. I'm just saying rents are already too light. There's nowhere else for these people to move that
Right.
it's going to be cheaper. And if we're going to go in, make their unit a little nicer, we have a lot of tenants that move from one unit to the new unit, right?
Right.
Because they're like, oh, I am willing to pay an extra $200 a month to have this really fancy brand new unit. So it's just being really realistic with the underwriting instead of saying, hey, if everything goes right, and we can show you that too. Hey, if everything goes perfect, you could end up way up here with some
Right.
really powerful returns. But if that doesn't happen, still
Right.
really good.
So you show it in the system. You have that system that shows everything, right? Like underwriting system.
Yep, yep. So we have obviously we have an investor deck, and then we also walk through people through different essentially Excel models, right? Where we can show you, let's manipulate things, and we can do it live on a call with an investor. They can see, stress test different scenarios of the deal.
Oh yeah, it's important point, especially how much is per door. It affects then value add. It's all this plays a big role in investing as well. And a lot of multifamily, let's say the investors, when they buy multifamilies, how can they create, how can I say that, the lifestyle flexibility? I know like we're saying, okay, if I invest in this multifamily or that, how can I create that retirement plan for a passive income? Meaning that, is it a good advice for them to be in that cash flow and investing in that real estate?
I think real estate is the best way to create a lifestyle, and I'm basing that off of I'm less interested personally in net worth and
Right.
more interested in cash flow. Can I sustain my lifestyle based off of cash flow I have coming in? And I say that because I have enough clients now that are coming to me at 65 years old saying, I have all of this stock and I don't feel comfortable retiring because I'm having to sell this stock and I'm paying taxes and it feels not good because what if I live to be 95? I actually didn't save enough for that and I'm just always drawing down my stock portfolio. And
Uh-huh.
so I think when you invest in real estate, it's just a different avenue and it can be partnered with stock. I'm not saying to have no stock. I have stock personally, but I'm more heavily invested in real estate because over time, when you reach a point when your lifestyle is covered, that's when you're financially free. It's not because I have $20 million in stock account that's fluctuating like this that I can't do anything with. You're not financially free. At least that's how these people feel.
That's a good point. That's a really good point. You know what? And some people don't see it that way, but I like the way you actually put that.
There's arguments to what I'm saying, right? And there's a lot of ways to build wealth. I'm not saying that this is the only way, but I think when you invest over long periods of time with people who really know what they're doing, your cash flow is going to build. It is tax-free money because of the depreciation. So you're getting $6,000 a year, and then because of bonus depreciation, you're banking that. And then when we sell the property, you're also not paying cap gains on that.
Right.
So real estate is a wealthy person's game for a reason.
Of course.
Yeah.
You know what? And based on that note, what piece of advice would you give to investors who would like to create that passive income and wealth in their life?
I really do think the best thing to do is to find an operator that you trust
Okay.
Put in a reasonable amount that you're comfortable with. Alternatives are you're doing your own vetting. It is an SEC compliant thing, right? This is a real thing,
Okay.
but you also need to do your due diligence up front and then be careful in terms of, most of our investors start small and then they come back, they see how we work, they see the distributions happening, they're getting very transparent reporting, on our deals. And then now we are in a situation only 2 years in where we have a couple of them that have come to us and said, you know what? I have this office space that is not bringing in any cash flow. It's already kind of popped. I did well on it. It's gone up in value, but I don't want to manage it anymore. I'm more interested in retirement, or I like multifamily based on my 100K investment with you is doing really well. I'd actually like to sell this thing and 1031 it in with you, and you can deal with it and manage it. And so we have some high net worth clients that we're now building out kind of a family office wing of our business, if you will, where we manage multifamily. We manage people's real estate stack. So I don't manage people's holistic entire portfolio, right? But I do manage their entire real estate portfolio, and we do some estate planning with, it's usually like, I want to pass this down to my children. I
Right.
need to get this into a trust. I need this to be cash flowing, hopefully at this percent to sustain my life. And then it's an easy transfer to my children. That's a lot of the conversations that we're starting to have.
Wow. So it's like you're starting with the small investors and then they grow with you. What's
Yeah.
the minimum investment that they can invest with you?
50,000. 50,000 is the minimum. So
Amazing. Amazing. So you're giving a chance for a small investors to grow and to become.
yeah, I think it's totally fair for people to not want to start with a huge chunk of money. First of all, this type of investment, our investors are accredited for the most part, and especially now that we've started to advertise our deals. So you have to be in a position where you are comfortable with the amount of money you're putting in. I think anytime you do an alternative, or investing in general, quite frankly, people like to look at stocks like they're really safe. I'm like, you need to be comfortable losing your money or having it going down. I never want to take someone's last 50,000 because there is a lockup period, right? We have a 5-year hold. Now, I haven't had this happen, but if a client came to us, there are provisions. We would try to help them if there was some sort of crisis, right? But realistically, the people who are investing with us, they're saying 50, 100K, I definitely don't need it for 5 years.
Invest.
And that's the type of investor that we're working with. We also are trying to reach more young people. I am passionate about we have a slew of young doctors, primarily dentists, chiropractors,
Right.
surgeons,
Right.
pretty fresh out of residency, starting to build their own practice and saying, I don't have time to manage a real estate portfolio on top of running and building my own business,
Right.
but they're allocating a particular amount. So they're putting 50,000 in every deal or one deal a year, and over time that they're going to be in a really nice spot because they understand, yeah, it's not a lot of cash flow for me realistically year one, but when you start 1031 in that and they've got a long time to go and they're
Right.
high earners, they're going to be sitting very pretty.
I realized a lot of my clients, doctors, dentists, they wanted to invest and they like, okay, Stella, what's the best investment? Where can I put my money? How can I make this investment to grow? And when they come to me for an advice, no matter what kind of investment they buy, I always will tell them, do you due diligence? Because I feel that's the important step for them to research themselves. We can give an advice, we can tell them what to buy and showing the cap and OI and all other factors. But when you do the diligence, you can actually discover other things. What about your investors? Do they do the diligence or are you the one who's helping them to go through this process?
They do a lot of their own due diligence, which has really become easier because of AI, quite frankly.
Right.
And now the other downside of that is there is a lot of information out there, and I think it's overwhelming to do all of your own due diligence. There are also fund managers who will take $100,000 checks and then deploy that with operators like myself. We have one partner that essentially that's what they've done, right? Is they've built up a big investor base. They vetted us very hard for months and months and months. And then they decided, yeah, we're comfortable with this group, deploying our clients' capital with them. So there's a couple different routes that you can go. Like you can vet me yourself, or you can come to me potentially through a fund manager. I would say my issue with some fund managers, and I'm a little vocal about this on LinkedIn, so I'll just say it here and be controversial because everyone knows that how I feel. There are some very good ones. Our partner did great due diligence. They're a really good steward of people's capital. There are a lot of fund managers who have never operated a deal. They know nothing about apartments. And quite frankly, I don't even know why they think they're equipped to evaluate us, and they're asking for unrealistic returns. So, again, I think my advice to my clients is do your own due diligence, talk to multiple syndicators. Here's a list of things that you should ask them. You could also, quite frankly, put it in Chat GPT and say, what should I ask? This is what I'm thinking of investing in. Put my deck in there, run it by someone else. If you know someone like you, take it to you and say, hey, Stella, I trust you. Look at this. You're a real estate professional. I do think people need to do their own due diligence, but at the end of the day, too, it's kind of a gut feel. Do you think I'm trustworthy? Do you look at my track record? Do you understand what I'm saying? And the nice thing about apartments is it really is just math. I can make someone understand an apartment building in a pretty short period of time, at least, to a level where they should be comfortable making a decision. You also have people that are just analysis paralysis, right? They're never going to invest in anything because they're like,
There's a couple of them like that I have now.
yeah, it's just like you're just never going to do anything because
You
at
know
some
what? When I'm selling residential luxury listings, it's like you have more emotional clients. It's more emotions. When you're selling a commercial and multifamilies and all that, it's all about the numbers,
yeah.
and it's two different approaches that you have to approach. So I know exactly what you're referring to, and this is we have to deal with a different clientele.
Good investors, in my opinion, make a decision within two calls. They're either going to do it or they're not. They trust themselves. They go with gut. They get confident enough in what they're investing in. And the reality is, most people have a lot of money in stock. I'd ask them, do you know the inner workings of Microsoft? You're putting your entire net worth in companies that you know nothing about. This is really very simple to understand. So if we're talking about risk, all investments have risk, but I do think that real estate, specifically multifamily, or there's the industrial, you can,
Right,
lots of investment real estate. Homes investing, I am not a fan of because residential is very emotional.
right.
It's not the same thing. You're also very exposed because if you have one tenant that decides to not pay or is a pain in the butt, you're just not diversified. Like the way I look at an apartment building is, okay, we have 60 units. We have two people that we've got to evict or they're a pain. You're fine. Doesn't
It
matter,
doesn't affect a lot. It doesn't affect in value as well.
Yeah.
I see. I see. Well, in real estate, meaning in the commercial investment, numbers what actually makes sense. If the numbers make sense, it's a good deal. I think you can be good in that as well.
Yeah, you still look at comps too. Comps is not the only thing, but like it's relevant.
Demographics and all that, of course, location, demographics, everything has to play a
Yeah.
role in value as well.
Yeah.
Lauren, I learned so much value from you, your leadership, and while you're building your successful company, there's so much that you experience and you sharing with all of us. I feel that we can get more and more information if it would be longer on that podcast. But I'm thrilled to have you today. It's a pleasure. Hopefully, it's going to be a next one and the next one, and we can have more that information, that valuable information. Thank you so much for joining my podcast, and it was a pleasure having you.
Thank you so much for having me. It was a pleasure talking with you, and hopefully, your audience finds it beneficial. And I'm always open for educational conversations. So you can find me on LinkedIn and shoot me a DM, or you can find me at Lauren at veritasequitypartners.com. Happy to chat with anyone who's wanting to understand more about multifamily investing.
Thank you. Maybe we can invest, together in the future.
I'd love that. That would be wonderful.
Looking forward. Thank you, Lauren. Thank you. Bye-bye. Thank you for listening to the Stella Top Seller podcast. If building real wealth through real estate is your goal, this is your show. Subscribe and follow me on social media. I'm Stella Shalamova. Keep thinking bigger, investing smarter, and living the top seller mindset. Until next time.